please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Big Deal. Countdown to the Big Bang Union Budget of 2018 has really begun. What are the markets expecting and what is the deal street really looking at? To find all that, we have two important gentlemen joining us on the studios. Well-known deal maker Ashok Wadhwa and tax expert Amrish Shah are both here in the studios with me. Gentlemen, so good to have you on Big Deal. Starting with you, Ashok, it is going to be an election budget, you think, considering union elections are next year, and we have several state elections to deal with this year as well.
I guess it's fair to expect that the government will be very cognizant of state and central elections while framing this budget. And therefore, it will not be unfair if the government does try and bring in some populist measures in the budget. Having said all that, I continue to believe that this government and our Prime Minister is so focused on our fiscal discipline that I don't really see. I know there's a talk about, is it fair if the finance minister compromises the fiscal discipline by a bit? Yes. I think it's fair, but I don't think that they will do it because they're so focused, and having got the rating up now, they want to make sure that every other agency follows suit. So
I'm glad you brought that up because there's just so much to discuss on the fiscal deficit front. But let me get Amrish also in. Amrish, do you think that there'll be enough headroom for the finance minister to do some tinkering so that the transaction space really benefits for us?
So if you look at the transaction space today, I think the predominant thing is under the IBCA. And therefore, there is a need today to address some of the tax issues, which are being faced by several people when they are looking at the IBC cases. I think that will be one thing which I think will definitely come in.
Okay. So, Ashok, then let's begin with the fiscal deficit. Growth versus fiscal prudence has been an ongoing debate. Do you think that, enough number of papers would come in the market by way of disinvestment? Air India talk has already begun, and that could be the big theme on the deal street, which will also help fill the gap of fiscal deficit for the government.
I think to begin with, the deal street at this point of time is certainly very fertile with some high-quality transactions, even before the government's divestment program.
Yes.
Government's divestment program will really be determined in some ways by, the buoyancy in tax collections on one side, and as I said, the desire to be a little populist and yet maintain fiscal discipline. Air India is already in discussions, and some important changes were announced earlier this week by the government. I'd like to believe that the government will explore, particularly if the market sentiment continues to be positive. The government will certainly explore other opportunities. We do know that the government is already kind of egging and pushing public sector banks to go out and raise more capital. So all in all, I do see more government paper coming to the market between now and March. And as I said, depending on what the tax collections look like, the push could be even more aggressive.
But Ashok, we all know that it all depends on how buoyant the equity markets are. Today, we cannot be bothered at all. But there are several issues that can really break the kind of momentum that we are seeing. How are you seeing the equity markets ahead and around the budget this time around?
I actually don't see anything in the foreseeable future which gives me any impression that the markets are going to backtrack in any significant form at this point of time. Liquidity continues to be a strong driver. I'd like to believe that as corporates announce the third quarter earnings, you will probably see an uptake which will provide additional sentiment. I'd also like to believe that for the first time, when I started hearing more and more about private sector seriously engaging and planning capex. Now, if the third quarter earnings are good, as is expected, if this capex from the private sector starts becoming a reality, I would think that will provide even greater positive sentiment to the market, which is already, as I said, being driven by liquidity at this point of time. So I don't see anything in the foreseeable future which gives me an impression that the market is going to backtrack in any significant form.
All right. So you're saying that capex could also get a big thrust. What are you seeing, Amrish? You speak to so many of your clients. Is there enough traction on the deal street as well and also on capital expenditure?
Yeah, I think I agree with what Ashok has just said on both of those aspects. I think the only concern in some of our clientele is around, this sort of news around the long-term capital gains tax and how it will be dealt with in the budget. I think that's the only sort of a slight factor which comes in.
All right. Ashok, what do you think about the long-term capital gains tax? Is that going to really spook the market?
It's been a subject matter of discussion ever since Mr. Jaitley became the finance minister. Will he withdraw capital gains tax, or will he dilute the concession in some form and shape? My own sense is it's unlikely to happen. Government recognizes the value of a bullish, buoyant capital market. Government recognizes that ability to raise capital, particularly where private sector capex has to go up significantly, is a critical factor. Government realizes that public sector banks have to go out and raise serious capital now and for the foreseeable future. I think every single characteristic of this economy at this point of time, to me, tells me that this finance minister, who thinks very, very rationally, is unlikely to, at this point of time, disturb the sentiment in the capital market. Should that happen because there's a discussion going around it, I think it will have some impact. It will have some correction, but all that for a limited period of time. Perhaps a week, perhaps 2 weeks. After that, business will be back as usual.
All right. So the next important thing that this year, Amrish, you want to add?
Just to add, I think, primarily if you look at, what they are collecting versus what they used to collect, and that's where, the current regime has come into play on the Securities Transaction Tax. I think, they were collecting much better under that. It's more defined. Having regard to that, at best, if they want to tinker a little bit, I think it could be the period of holding. From 1 year to 2 years, which makes it like an unlisted company. I think at best, if they want to do something there.
Have we got enough also clarity when it comes to GST on the transaction side?
No, to our mind. I think we were all expecting that they would clarify in no uncertain terms that all transactions like a merger, demerger, or a sale of business would be exempt. It's not come in black and white, if one can put it that way, but I think the interpretations that are there today is similar to what it used to be the pre-GST days. So it's that those transactions do not, have a GST impact.
Another big thing which 2018 as a year is dedicated to is going to be the stressed assets resolution, especially through IBC. Now, how are you seeing the feasibility of the way it's being conducted right now, and do you think that budget could really focus on clearing some of the doubts and making it a little more practical?
Well, to begin with, Nisha, I think I have to state that whereas lots of people have given our finance minister huge amount of credit for introduction of GST, I think the single most important legislation that this government has framed in the year 2007 was related to the stressed assets. The IPC is a super piece of legislation. I recognize its early days. I recognize as a result of this early experimentation, the courts, companies, the resolution professionals are all going through a period of trying to find the right solution. Government has made several iterations and changes in terms of making this resolution a more effective resolution. So what we have today is significantly more productive than what we had when the legislation was first introduced. So the learnings of the many months are being introduced in change of legislation. That process will continue for sure. I think there are some important tax-related issues related to the resolution process. What happens when assets are sold at a cheaper price? What happens when somebody buys it at a cheaper price? What happens when loans are written off? All of these have important tax consequences, and I see a resolution of these being planned through the budget process. Having said that, I think still early days. We still have to see one of the big cases getting resolved. I think the next 12 months are going to define the manner in which these resolutions take place. In many ways, they're going to determine how how many buyers actually step up and aggressively to buy these assets. My own experience thus far is that it's working well. That I'm seeing serious amount of interest, and you will see that many of these otherwise good quality assets will be productive and will start delivering serious value, both from a GDP perspective as also all the constituents, including banks, in the next 12 to 24 months. So a very important piece of legislation without doubt.
Oh yes, Ashok, but we also have to brace up for the fact that some of the assets may not evince the kind of interest that some of the other steel or cement assets are at this point. So we'll see how that really goes. But Amrish, you have in your notes stated a list of those tax issues that Ashok alluded to. If you can take us through, what are the important ones that the budget may concentrate on?
So I think three, if I can break them up into those things. I think Ashok mentioned about, all of these assets, and IBC is a process of where the lenders need to take a haircut. Now, for the target company, it's a write back when the haircut is, finalized. And what happens to it in terms of the income tax relating to that write back. So I think the government has started on a good note this year by bringing that MAT, they will be able to offset against the full loss versus, partial loss. So I think that's the good first step. I think they need to go the whole hog, as I see it. And they need to say that even from an income perspective, this will not be considered as income. I think that will help a lot of the process going forward. The second is, when there is a change in shareholding of an unlisted company, there is a need to change that law to say that the losses will not evaporate.
Yes.
They will be available. And I think that is the second need. And I think the third point, which Ashok alluded to, was the buying and the selling of the shares itself.
Yes.
I think that also an exemption is needed from the gift provisions that we have today. That if somebody buys something lesser than the net asset value or the deal value or the trading price, it is not an income in that person's hand.
Yes.
I think that needs to be clearly provided, because that will give a lot of fillip. And I think the government last year, in the ease of doing business perspective, had said IBC is one of their key, amendments that they're bringing to the Indian economy. So if they need to take it and, showcase that, most of these deals are getting done, because today there's a lot of, time that is being spent on the tax issues around this, as people are preparing a resolution plan to be given to the courts.
So
or the tribunals.
Practicality of that is questioned. A lot of critics have questioned the MAT applicability also. Can you take us through that detail and what could be expected in the budget?
So I think there are two parts to the MAT applicability. I think the part one is that when a loan is written back by the target, it goes to the profit and loss account and therefore is subject to MAT, because there is no carve-out today under the MAT provision. They can do a carve-out there. Like they have done when Ind AS came in and, people were doing fair value of their assets. They did a carve-out last year. So I think the similar thing can be done this year. And I think all of this needs to be done for the current fiscal year and can't be from the next fiscal year, because some of the deals will close before March 18. So I think that's an important element there. The second carve-out is what they've already done, which is what I said, was that on these companies, you get the full loss set off for MAT purposes. It's not, the lower of depreciation or, cash loss, which generally is the case with all the other companies.
Right.
So I think those are the two elements to the MAT part, which is the most critical element.
Ashok, given that technicalities and there's just so much complication when it comes to the tax issues, do you think that the success of IBC could be questioned at this time unless all these issues are really sorted on ground? Because on paper it looks good, but practically doing it could be less feasible, at least at this point, and we need many changes before we really reach the success.
I think we need to understand one thing. Any introduction of a new legislation is going to have a period of settlement.
Yes.
We can't be impatient about it. I think the one thing that this government has demonstrated time and again is their ability to listen to the challenges and quickly implement resolution of those challenges. We've already seen the number of challenges that have been addressed. Should the promoters who have caused the damage be allowed to bid? Should they not be allowed to bid? And they've come up with resolutions which are very practical and I think can be easily implemented in the long term. We need to remain positive that this is a legislation which is going to create positive utilization of capacity and assets that are otherwise currently unproductive. And as we progress and as new issues come up, we need to keep reaching out to the decision makers, and I think they have responded quite positively. So I remain quite optimistic that IBC shall, at the end of the tenure of this government, be one of the finest changes in legislation that they have introduced.
You've put it even above GST, so that's a big one. And we'll see by the end of the year where we have reached. I'm sure that we will have so much more to talk about in this particular front. But Amrish, there are many more things that, as a tax expert, you expect from the union budget. What is the other clarity when it comes to the indirect transfer provisions that you are penciling in for the finance minister to address this time?
So if you look at the indirect tax provisions, I think a couple of years back they brought in this concept of exemption when two foreign companies were merging with an Indian asset being the predominant asset. So the two companies which were involved in the merger process were exempted, but there was no clarity on the shareholders holding shares. And I think that's one thing which I think they should look at clearly, because if you are saying that one element of a transaction is exempt and not taking care of the second element, then the transaction will never happen.
Right.
So I think that's one thing that on the indirect tax. But I think more importantly, I think will be on the demergers.
Right.
Because what has happened is that since the introduction of Ind AS, which prescribes the accounting treatment now for all listed companies and a large number of unlisted companies, if there is a demerger transaction between two unrelated parties, then it needs to be at fair value.
Right.
Now that's the accounting requirement. But the tax law also prescribes an accounting requirement which is at a mismatch, because the tax law says that the accounting should be done at book value. Now, the accounting standard says fair value, the tax law says book value. So that mismatch needs to be removed. And that otherwise, even from an IBC perspective, let's say if I don't want to buy the full company, but I am very interested in the assets to come over to me, that will be needed. So one doesn't know how a transaction will get structured, whether generally or in an IBC, but that will help quite a bit going forward. And they've partially done it last year when they recognized some of the issues for the transferor company through the MAT provisions.
Right.
But they've not made the change in the main section for demerger itself, the definition itself. So there is today a dichotomy in the law between a MAT provision section and the main section itself, so which they need to just iron out.
Right. So this is one clarity which is required. But of course, Ashok, we have seen the government come out with clarifications and changes even outside of budget. So how much importance will you really allude to budget this time around? And what are your top picks that could really come out of it this time?
For me, the budget is a fiscal statement, government's P&L and balance sheet. The important numbers for me are fiscal deficit. What is the growth the government is budgeting? What's the buoyancy in the tax collection? Very important. What's the increase in the tax base? Because, serious changes have been made to increase the tax base. We do know we have a very low tax base. How's the tax to GDP ratio coming up? Unlike in the past where budget was seen as a consolidation of all major announcements, I think this government has done away with that.
Yes.
The fact that they announced some major FDI changes, just 3 weeks before the budget, shows that they don't want to really treat the budget as one big bang reform, but continue to treat the budget as government's report card of accountability and as I said, balance sheet and P&L. So to me, those will be critical numbers. There will obviously be planned expenditure. I'd like to see how much more focus is given to education, to skill sets, to healthcare, to some of the very important programs that the government has announced 3 years ago. I'd like to see the progress and report card on those, so that we do know that when we make announcements, these are not just visionary statements, but these are visionary statements followed by serious actions and implementation.
Any particular sectors, Ashok, on your radar, which could really be impacted because of the budget this time?
I think overall, the housing, including the low-cost housing sector, the house appliance, the home appliance segment, I think the whole home space would be an important watch point. That space has, over the last few years, really not kept pace with the market. The other area which has not kept pace with the market, but I don't think there'll be much changes to show any positive input, maybe pharma. Pharma has really not kept pace with the market in the last 3 years. So I would say these two, but I expect more to come out of the whole real estate and the housing sector. Perhaps some more focus on government's capex, apart from roads, which have done phenomenally well, and compliments to our minister for that. Where else is the government capex being incurred? Also nice to see how the defense expenditure is coming up. Is it going up? Is it going down? Is there some saving there to be spread across other areas? Because these are all important pointers to where we need to focus and pay attention in the future.
Oh, definitely. And Amrish, any more points on your radar when it comes to taxation bit?
So I think if one has to look at, because the proactiveness of the government, I think how are they going to have the tax laws aligned to, some of the changes that are happening in the other laws? And I think some of those points, if they get it addressed, I think the deal making will happen much better, and
ease of deal making will also
so I think,
improve.
Because so if you have to move from 100 further up, I think now we will have to be more challenging, and so some of these points will help.
Oh yes, Ashok, let me give you the last word on this discussion. We have again come to the crossroads where we are discussing growth versus fiscal prudence. Where do we stand? You've already spoken about disinvestment, but the focus will be what?
I think the focus will be on job creation. That's going to be the single most important agenda for the government in this budget. And obviously job creation can't happen without growth. So I think government will try and create positive incentive for capex, for increase in capacity, for new manufacturing, because let's not forget that manufacturing really creates the biggest number of jobs. So if you were to ask me a single point focus for the government, it will be job creation.
Capex, you said. Private investments, when are they picking? This is my favorite question to everybody in the know.
I think the sentiment has changed for good, for sure. We are already hearing more and more people talking about increasing capacity, setting up new plants. I think sometimes during the course of 2018 and during this fiscal year, you will see an uptake in capex by private sector.
All right, fingers crossed on that. Gentlemen, so good to have you on the show, and thanks so much for your valuable insights. So that was the expectation from the deal street, especially, and overall markets on the budget 2018. Keep it with CNBC TV18. Thanks so much for tuning in.